What's up, everyone, and welcome back to Payman's Bulletin. We're kicking things off with some massive moves from Tencent. They've been busy repurchasing millions of shares, a significant move that's got everyone talking. We'll break down exactly what this means for their stock and what you need to know about these strategic buybacks. Next up, we're heading over to Prosus. Under their new CEO, Fabricio Bloisi, the company is charting a completely new course, focusing on key regions and aiming for explosive growth. We're talking about a potential doubling of their market cap. This is a game changer, and we've got all the details on Bloisi's ambitious strategy. And speaking of Tencent, they're not just buying back shares, they're also raising serious capital. We'll reveal the details of their latest CNY 9 billion note issuance under their Global Medium-Term Note Program, a move that could significantly boost their liquidity and fuel future growth. What does this mean for their financial strategy? Finally, we're circling back to Tencent for a closer look at their daily trading activity, including significant short-selling data and repurchase details that could impact their immediate performance. Stick around for all the essential insights. Make sure you're subscribed and have that notification bell on so you don't miss a single beat. Tencent Strategic Share Buyback, a deep dive. Tencent is making waves in the market with a significant share repurchase program. In a move that signals strong confidence from within, Tencent, 700HK, has recently repurchased a substantial 867,000 shares. This wasn't a small transaction either, with prices ranging from $627 to $643 per share, totaling approximately $550 million. This latest buyback activity is part of a larger mandate, and since its approval, Tencent has acquired a remarkable 61.592 million shares, which accounts for about 0.67028% of its total issued shares. The market is buzzing with this news, especially considering the recent short-selling activity, which saw $1.19 billion traded with a ratio of 12.243%. This strategic move by Tencent is seen by many as a clear indicator of the company's commitment to enhancing shareholder value and its belief in its long-term prospects. Analysts and investors are closely watching Tencent's buyback strategy, with some suggesting it's a smart move to counter market volatility and signal undervaluation. The community is actively discussing how these repurchases might impact the stock price and overall market sentiment. Stay tuned as we unpack the implications of Tencent's financial maneuvers, but first, get ready for a major strategic shift at Prosus. Prosus under Fabricio Bloisi, a new era of focused growth. Prosus is undergoing a radical transformation under its new CEO, Fabricio Bloisi. Gone are the days of pretending to be a sprawling internet giant with a presence everywhere. Instead, under Bloisi's leadership, Prosus is redefining itself with a clear, global footprint with regional focus. The company is now strategically concentrating its efforts on three core regions: Europe, Latin America, and India. This sharpened focus is designed to propel Prosus from its current valuation of $122 billion towards an ambitious $200 billion target. Bloisi himself is personally incentivized with a moonshot bonus tied to doubling the combined market capitalization of Prosus and Naspers from $84 billion to $168 billion by June 2028, with a potential $100 million reward if successful. Furthermore, Prosus is shedding its South African identity, acknowledging it as merely where we started, while aggressively buying back its own stock, having repurchased 29% of its shares since June 2022. This strategic pivot is already yielding results, with e-commerce reporting a significant turnaround and a substantial increase in dividends from Tencent. The market is reacting positively to Prosus's clear strategic direction and aggressive capital allocation, with its share price reaching all-time highs. Investors are optimistic about the potential for significant growth and increased shareholder returns under Bloisi's leadership. Will this new focus propel Prosus to new heights? We'll keep you updated, but next, we're diving into Tencent's latest financial maneuver that's raising billions. Tencent secures CNY 9 billion with global note issuance. Tencent is bolstering its financial strength with a massive note issuance. In a strategic move to enhance its liquidity and support long-term growth initiatives, Tencent Holdings Limited has successfully completed the issuance of CNY 9 billion in notes. This significant fundraising effort, executed under its Global Medium-Term Note Program as of September 23, 2025, includes notes maturing in 2030, 2035, and 2055. This issuance underscores Tencent's proactive financial management and its commitment to securing capital for future development. The company, a leading technology firm based in the Cayman Islands and listed on the Hong Kong Stock Exchange, operates across various sectors including social networks, gaming, e-commerce, and payment systems. This move has been met with anticipation in the financial community, with analysts maintaining a buy rating and a price target of HK$736.00 for Tencent stock. The issuance is expected to strengthen Tencent's financial position and provide ample resources for its ongoing innovation and expansion plans. This substantial capital injection is key for Tencent, but what else is happening in their daily trading? We've got the latest on their buybacks and short selling next. Tencent's daily trading dynamics, buybacks and short selling insights. Delving into the daily pulse of Tencent's market activity reveals key strategic plays. Beyond major announcements, Tencent 700HK has been actively managing its stock through significant share repurchases. On the 23rd, the company bought back 867,000 shares at prices between $627 and $643, involving approximately $550 million. This is part of a larger trend, with Tencent having repurchased over 61.592 million shares since its mandate was approved, representing 0.67028% of its issued shares. Concurrently, the market has seen substantial short selling activity, with $1.19 billion traded and a short selling ratio of 12.243% as of September 23rd. These consistent buybacks, coupled with significant short selling interest, paint a dynamic picture of Tencent's stock performance and investor sentiment. The ongoing buybacks are being closely monitored as a potential stabilizer for the stock, while the short selling data provides insight into market speculation. Investors are weighing these factors as they assess Tencent's immediate trading outlook and future potential. That's all the breaking news for today, but we've got a quick recap and a huge call to action coming right up. And that wraps up another Payments Bulletin. We saw Tencent making major moves with significant share buybacks and a massive CNY 9 billion note issuance. Prosus, under new CEO Fabricio Bloisi, is charting a bold new course with a focused regional strategy. We've covered the key players and the market-shaping events. Don't miss out on future updates. Make sure to like this video, subscribe to Payments Bulletin for more exclusive financial insights, and hit that notification bell so you're the first to know when we drop new content. Also, leave a comment below with your thoughts on today's news, and follow us on all our social media channels for daily market buzz.